Now we're going to talk about budget forecasts and how to make some of those forecasts in your budget. First of all, let's focus on revenues. Revenue forecasts are your best estimates for what to expect during the budget period. Most of us, that's annual budgets, but for many, it's also a biennial forecast, which can be even more difficult. Let's talk about property taxes first. Property taxes involve a levy rate, an assessed valuation, and a resulting tax. But the assessed value is controlled by the county assessors, and the tax, your policymakers have some control over. They can levy as much as 1% more than the last highest levy. And then the levy rate is derived from the result of the assessed valuation and the taxes amount levied by your policymakers. So it's a bit complicated. And in fact, the property tax laws date back well over 100 years, and they've been amended several times since that time, and every amendment has added a layer of complication. So this is one of the more difficult areas to explain to others how their property taxes are being affected by your budget. One of the key decisions that your policymakers will have is whether or not to take advantage of the 1% increase in property taxes collected that's available to them through the state statutes. There's also some specifics around whether or not the implicit price deflator happens to be less than 1%, and some specifics that you want to familiarize yourself with as well. And MRSC has a revenue guide that covers these items very carefully, and I would recommend it to you. It's available online. New construction adds to the tax base, and this really isn't at your discretion. Unless you choose to lower the taxes collected by your organization, new construction will automatically be added by your assessor, and last year's levy rate will be used to determine the tax amount to assess that new construction at. And again, that will automatically be added to your taxes. So in terms of forecasting, part of what you'll need to do is determine what you believe that new construction number will be and how much the tax base has expanded. You'll need to make sure you include a public hearing about property taxes, as that's a requirement of the RCWs recently as well. And in that public hearing, you'll have to talk about what you expect the tax levy to be and what the resulting tax amounts are. Sales taxes are a little bit more difficult to estimate, and as a result, many of us use trends, 5 years or even longer. I would recommend maybe 10 years of sales tax trends broken out by sales tax categories. And we'll talk more about that in just a moment. But it's easy to overgeneralize, and there's lots of different things typically going on in your sales tax base that you'll want to understand through these categories. Oftentimes, sales taxes are impacted by consumer sentiment. And the consumer sentiment, in other words, their willingness to go spend money, is affected by the national economy. So many times we tend to look at economic trends and use that as we think about what to forecast in our sales taxes. One of the things that I advise oftentimes is just know your business community. What is the nature of the retail sales taxes that you collect in your community? Is it based on a certain kind of business strength that's reflective in your community? Is it more generic than that? Is it largely dependent on construction activity, which would be more volatile? So know your community and talk to people who are business community leaders that can help you understand that better as well. That will certainly improve your forecast. Cities get about 1% of the total sales taxes paid. It's important in your budget to be clear about this and reinforce the message that even though the sales tax rate may be from 7 upwards of 9+%, that the cities still collect roughly about 1%, depending on the nature of your city, of the total taxes that of the sales price. So 1% is really the sales tax rate in your city. I mentioned categories of sales tax a minute ago, and the State Department of Revenue can be very helpful in providing you information about your sales tax collections and the base. And so that would be a resource I would certainly recommend to you, that you contact the State Department of Revenue if you're not already getting this kind of information. Many of us also levy some kind of a business and occupation or utility tax. And these are oftentimes similar in sales taxes in as much as they can be influenced by the economy. There are certain, again, parameters that the laws provide with respect to both, and so you want to be familiar with those. Again, the MRSC Revenue Guide is a great resource to be able to understand that better and to have a reference back into those RCWs. Your city attorney will be important in terms of helping to understand how your ordinances are in effect with respect to certain kinds of, for instance, utility activity as we move away from land-based phone systems to cell phones and then now into data plans. Those are all things that need to be taken into account with respect to forecasting the B&O and or utility taxes. Those are typically general fund revenues, and another significant area of activity is utility funds. And there's a lot of forecasting of the revenues that need to occur here. And oftentimes this forecast involves figuring out what the utility fund expenditure needs are, or what's oftentimes referred to as the revenue requirement, and then solving for that revenue requirement by looking at the user base and deriving what the fees need to be in order to provide for the kinds of costs that we expect to have in our utility. And so you'll need to understand kind of the relationships there, and also it's important to do a review of these fees periodically. It's easy to get these kind of locked in and a bit out of date, and you will find that maintaining a financially healthy utility can be difficult if you aren't reviewing these rates on a regular basis. There are certain restricted type revenues that also need to be forecast. Real estate excise tax is directly related to the exchange of real estate properties in your community. Again, that can be influenced by either residential or commercial, and typically your county is able to provide good information about the kind of activity that's occurring in your real estate excise tax base so that you can understand the nature of it and use that to help you forecast better. Hotel motel taxes are administered by the State Department of Revenue, so that is a great resource from them in order to understand who's paying into the hotel motel tax revenue base and at what rates. Oftentimes this can be a bit irregular, and this will help you make sure that compliance is good with the hotel motel tax payments. There are some state revenues available with respect to providing resources for criminal justice systems. Again, the MRSC revenue handbook will help you understand those better and be able to forecast what those are going to be in your community going forward. And then you may have some local ordinance-driven impacts on your revenues as well. Maybe you've got a business license that has been implemented and it's got certain characteristics that you'll want to be familiar with as you use that forecast and forecast for those kinds of revenues as well. You'll need to forecast fund balances, especially if you're expecting to use any of that fund balance as part of your beginning cash balance to help with the subsequent year's budget. Oftentimes you will see this especially true of capital projects. If there's money left in a given budget cycle, then that can help provide resources for one-time kinds of expenses like capital projects or investments in technology in subsequent budget cycles. So you'll need to estimate what those amounts are, and then you can use that estimation to have a conversation about how best to deploy those resources going forward. Maybe you're rebuilding reserves that were used to help balance previous budgets, and this would be a good opportunity to understand how that forecast can help you understand how quickly you can rebuild those reserves. Those are revenues and fund balances. Expenditures also need a bit of forecasting as well, although oftentimes many of the expenditure forecasts will come from those who are proposing budgets and talking about what level of expenditure they're recommending for their proposed budget. Some of the key things that you will want to be clear on in terms of forecasts is compensation. Oftentimes this is 2/3 or so of what we spend our resources on. We provide service, and service delivery is provided through employees. And so 2/3 of our expenses are oftentimes in the form of FTEs, full-time equivalent employees, that have a compensation through salary and through benefit packages that can include the required taxes, but also medical benefits, pension amounts, and things of that sort that we'll want to provide information on in our budget instructions, so that the information we get back from staff is based on what we expect those numbers to be and is consistent across the organization. Other things such as like this include things like fuel costs. Are we anticipating and asking staff to include increases in fuel expenditures based on the price of fuel in future years and utilities, or maybe this is a time when those costs won't be as expensive as maybe they've been in the past. So providing guidance on what we expect will again help make sure that that's consistent across the organization instead of independent decision making going on from one budget proposal to the next. Replacement accounts is something that, again, you want to be thoughtful about how you ask people to respond to vehicle replacement contributions, technology replacement contributions. Again, consistency across the organization will be a product of you providing some direction on these areas to staff so they can approach it in a way that you've asked them to. These forecasts typically are for the budget period, and that can either be 1 year or 2 years, as we said. But also, it's becoming more common to see long-range forecasts being provided along with budgets, 3 years, 4 years, 5 years into the future. And they can either be trend forecasts or they can be informed by some decision that we think would occur. And again, that's all up to you. But some level of looking out beyond the budget period will help you be more financially secure. Secondly, the forecast can provide the effect on future years of current year decisions. So if you add a staff person or think you can use some financial capacity that exists today to accomplish a certain thing, the forecast will help you think about, well, what effect will that have in future years? That can be very helpful.